Today, since you are coming, most of you are coming from out of Turkey, so I want to give a small brief information about our market figures because we just finished 2015, as you know that. So I want to make a little bit, give information about our market, give a prospect for our market, and then in these days, actually in the last couple months, we have a very hot topic in Turkey. We are discussing, I mean the public opinion discussing a lot about the traffic line of business. So this is a very hot topic, so I want to give you information what's going on there since this organization is mostly related to traffic also. And I remember one topic was about the profitability in the motor insurance in this event. Maybe you can give some idea to us what can we, what should we do and how we change our traffic destiny. Unfortunately, it's very, because the results is very bad for the Turkish market. So I want to start with the figures first of all. In the Turkish insurance market, there are 61 company, 37 is non-life company, and 19 life and pension company, 1 reinsurance company, and 4 life company. These are actively operating in Turkish market. Maybe you can ask why different life and pension company, because according to our regulation, if a company operates in the health branch, they cannot sell pension. So the pension and life are 2 different areas according to our regulation. And in Turkey, there are 20,000, almost 20,000 employees in the companies, and 1.3 loss adjusters, and more than 75,000 direct and indirectly employed in the market. So when we look at from the, in terms of distribution channels, we have 119 brokers and almost 16,000 agents. Besides, we have also banks and leasing companies as a distribution channel. When we look at the figures, we already finished 2015. In the Turkish insurance market, we can tell there is no growth rate problem. We are already growing very fast. I mean, when we look at the last 5 years, these are in terms of dollar, it's 41% for the last for the last 5 years. So it's real growth in the market. And when we look at the figures, non-life produced almost $12 billion premium, and non-life is $1.6 billion, and total $13 billion as a premium we produced, the market produced last year. Private pension system already is going fast. I mean, these systems start in Turkey in 2003. So last 12 years, it's an achievement story actually, because right now we came total as April 2016, almost $16 billion. And also there is $2 billion state contribution. I want to give information about this state contribution. Participants get 25% of their payment as a state contribution by the government. So this is giving a huge actually stimulation for the market, and it starts in 2013. So you see after these years, growing rate increased very rapidly. And there are 6 million participants in the market right now in the private pension system. And this is our balance sheet. Total came to, including life and non-life pension companies' funds, it came to $33 billion. And because the market is growing very fast, our coverage is growing very fast. Coverage to the Turkish economy by the insurance industry came to $25 billion, and this is 43 times of our GDP. And of course, there are lots of foreign colleagues here, so maybe you wonder how the rate in the market, so it came to almost 75% in terms of paid-in capital. I want to give some information about the premium share of the premiums, share of the line of business in the total premium. As you can see from the table, from the slides, our main production is coming from MTPL. It's 24% of the total production. And secondly, we translate own damage, but we also called it kasko in Turkey. Second branch is own damage insurance policies with 18%. And third, we can say fire and natural forces with 14%, and health and life 12% respectively, and accident PA is 4% of total, constitute of the total premium. So basically, I mean, mainly based on the motor branch, I mean, when we sum this kasko and MTPL, it almost came like 50% of total production is coming from motor. And it's very important distribution channel because we are selling with them, and they are dividing in terms of their branches with life and non-life. So when we look at non-life, the main drivers are agents. They are constitute 63% of total production. And secondly, banks is coming with 15% and brokers 13%, and companies itself is produced directly with 7%, especially using the digital channel and the direct sales channel. So, but I have to mention that banking proportion is increasing last couple of years. For example, this ratio was 12% for 4 years ago. Why banks channel is increasing? Because I will give some detail later. But our non-life sector is not profitable. So banks are producing in a profitable way. They are selling more PA. They are selling more individual products, and we can tell some fire and other motor brands more. Not, I mean, too much damage, more selective products. So it's more profitable. So we can tell that the companies discover the banks, and they are focused on concentrate on the banks in the last couple of years. And when we look at the life side, it's a little totally different because the 79% is coming from banks, and the agents proportion is very low here, and company proportion is 9%, both. Why bank is too much? Probably, you know, in the Turkish market, there is no accumulation life products. These are coming mainly, or 100, I can tell 99% is coming from credit link insurance products and driven by the individual loans. So the market just based on this, and that's why banks are banks have a domain on the market. Yes, if you talk about a little bit about financial results, this is the consolidated financial results, and total balance sheet profit came to 90 million. Considering our market have $12 billion, 12 billion Turkish lira, so $4 billion capital and equity. So 90 million, as you can imagine, it's very low. The main reason is the non-life balance sheet, non-life results affecting the consolidated results. But the life companies actually are profitable. On the life side, we have like $200 million profit. But on non-life side, we have losses. And the main reason is coming from the traffic and from MTPL. So you'll see from the claim ratio, traffic have over the 100%, it's almost 140%, and kasko and fire, health, general losses, and PA is very profitable branch actually, but the losses is driving by mainly traffic, as you saw from the slides. So when we look at the consolidated results of the non-life, it's at the end of this year it came like 200 million losses. And ROE rate is almost 8% negatively. So the cause of the total consolidated balance sheet profit is very low, cause very low. And also non-life companies are not profitable mainly driven by traffic, which I will give some detail about later on in my presentation. Why is that and what's going on the traffic side, as I said before. So, I mean, these are maybe, I told that there are $4 billion capital or equity in the market, and I said that the non-life companies are not profitable, but I don't want to give, I don't want to be pessimistic here. We are very optimistic, actually. And as an association, why we are we have hope and we are optimistic. I want to give some information about that. I want to give some prospects about our market. So first of all, 5 years ago, as associations, we made a workshop and we decided our vision in 3 ways. And first of all, we said, we, as a Turkish market, we want to become largest insurance and private pension market in this area, region. And in order to contribute growth to the Turkish economy and develop the Istanbul Finance Center project is the second vision. And the third vision was help the government burden and take their responsibility and expand insurance to the people and increase the penetration rate of the market. So based on the vision, I can tell that our market is a promising market because first of all, we have a very rapid growth rate, as I said before. In the last 5 years, this is the nominal percentage, 80% is increasing of the market, which is very high level. And I can tell that there is a harmonization to our economic growth. Almost we are doubled. We have almost doubled growth compared to the economic growth in the real numbers. And another, maybe, I mean, this is the per premium for the people. It's $150. It's very low, but it depends where you look at it. These figures, but I see a huge potential over there. So low penetration rate and low penetration per premium is containing a very huge potential in itself. So when we look at here, of course, you know that developed countries' premium to GDP ratio is almost 8%, and the world 6%. In Turkey, it's 1.5%. And again, this is very low rate, but as I said, it depends where you look at it. This is a huge opportunity also. So reverse the world. The Turkish market is a little bit changed and a little bit separate from the world. When we look at the world figures, 55% is coming from life branch, but in Turkey, non-life is dominated the market, so almost 90% is coming from non-life, and life is not developed as much as we want. And besides, in the private pension side, we also have a low rate. So this is the OECD numbers. It's almost 37%, but Turkey is 5%. So still, yes, there is a very good rapid on the private pension last 10 years, but last decade. But still, we have too much to go. This is another, for example, giving. Optimist situation for us because our population, our demographic situation is a little bit gives hopeless to us because urban population 90% and 24% is under the 14 years old of our population, and working age group, which means between 15 and 64 years old, almost 70% of the total population. And these are internet usage and social media usage are very high level, and the mobile phone usage are very high level. That means that digital products or digital channels could be successful in the near future. It's another opportunity. Right now, you know, as you know, that Turkish economy is an emerging economy. There are lots of huge investment. In the last 5 years, total investment are $70 billion. These are like stadium, third bridge, airport, but still there are some other huge investments like highways and city hospitals and Istanbul Channel. and the third airport. So on the commercial side, Turkish economy gives lots of opportunity for the commercial products actually. And another reality is, of course, SME. SMEs, like the world, in Turkey is very important as well. In Turkey, 99% of SME is constitute of the total enterprise, and 65 of total sales, 50% of total investments, and 60% of total exports are being made by SMEs. But the good or bad news, I mean, again, it depends on where you look at it, 50% of SME doesn't have any single insurance product. So this gives us a huge opportunity in terms of commercial production in the market. Another good news, our market is really sound and clear. The financial statements are really sound and clear because our rules and regulations almost complies with European Union norms, and sector highly regulated and supervised. And the authority and association have been working together on the solvency project in these days. So in a couple of years, we want to accept solvency regime. Yes, so considering all these parameters, we can tell that our market is giving too much, potential and too much hopeness for the companies. And I should say, all companies, all the managers, should put the customer satisfaction on the center, because this is very important. Because one of the problem in Turkey, including the insurance consciousness, but also insurance pertaining is not perception, is not good level. So we have to change this insurance perception. That's why we have to focus on, we have to give importance about the customer satisfaction as well. So there are some specific area the companies focus on these days. There are some other opportunities in terms of products. For example, in the life side, there is an annuity products, which the regulation published very newly. And another area is a complementary health insurance, which gives huge opportunity for the health branch. And legal protection insurance, we are working on it with the government. And also surety, for example. There is a regulation, but there is no any production. There are some small problems on the regulation side, but we are focused on to figure it out. And of course, considering the society aging, I believe that long-term care insurance is important. Yes, this is some brief information about our market. And I want to give some information about the MTPL problem in the market. Maybe this is more related to your conference topics and take your attention more. So, as I said, our non-life companies are not profitable. Main reason is the MTPL results, because MTPL is losing blood. And why is that? Now I want to give some information. First of all, I have to mention MTPL is the main main production channel for the company, main proportion of the total production. It's almost $2 billion MTPL production at the end of 2015, and number of policies 16 million. Every three policies, one of them is MTPL policy out of every three policy. So it's very important. So what happened in this branch affect all other branches and affect the overall consolidated balance sheets of the sector. So as I said, it's 25% of total production, but this is just non-life diversification. So this is the main driver of the production. That's why it's very important what's going on in the branch. So, but when we look at the figures, last 10 years, we made $2.5 billion losses actually. So you see in the last 10 years, every year we made technical losses. And the total it came to almost $2.5 billion. Especially in 2015, it came to like 700, 800 million dollar. So this affect our balance sheet. So our non-life companies consolidated losses came to almost $200 million, and with a negative 8% ROE. That's the problem. And we, as a sector, increased the traffic premium, MTPL premium this year. I mean, not this year, but at the end of 2015. And everybody asked question to us, why did you increase the price? And we are telling as a sector, we are telling to media, we are telling to public opinion, and even we are telling to the politician, we are making an explanation that we are losing money, we are making loss. And they ask again, you lost last decade and last 10 years, why did you increase specifically this year the price? And we are telling that before that, as a balance sheet profit, we were profitable. You can see from the figures. But this year, I mean, we were funded with other branch or other line of business to traffic MTPL line of business. But this year, the other line of business profits couldn't compensate traffic losses. So that's why we increased the price. And this is a very controversial discussion market occurred this year. And everybody says price went too much high. So I'll give some information about that. But first of all, I want to give some information about the reason why MTPL is claims or claims is increased too much. First of all, MTPL coverage is regulated in the highway traffic law. So as you know, that gives four coverage. One of them is a material damage coverage, and second one health expense coverage, and the other one permanent disability, and last one loss of support coverage. Material damage coverage, of course, it's too much, but we can handle it. And the second one, health expenses coverage. We are transferring our 10% of our premium to the social security institution. And that's why the insurance company in Turkey is not related to health expenses. So this is not related to loss in the MTPL. But these two coverage affect us. Why? Because first of all, in traffic law, the law is really old one, and it's not updated, and it's not satisfied today problems. Some definitions are not clear, and the situations should be excluded in the actually MTPL coverage. It's taking within the coverage of the MTPL by some court decisions. For example, I want to give information. Even some drivers, some insured people getting benefit or getting claim, even their own defects, for example. If somebody get alcohol and cause an accident, MTPL is paying third parties claims, but also the court says that you have to pay also driver or this insured person, even if he became a defected. So these increased our MTPL cost, apparently. And the other one, there is a when you go to, I mean, when you died or when you became a permanent disabled, of course you are going to, I mean, you want the indemnity from company, and the people usually go to the court by the lawyer. So when they go to court, the indemnity amount started to separate from the company's amount, because the court's experts, most of them are not actuarial, so they are calculating in a different way, and they are taking a different mortality table or taking a different technical interest rate. So the calculation between the company and courts, there is a huge amount of them, and people start to go to the courts more than before. And the last one, in the traffic law, there is a 10 years lapse of time. So if a court gives a decision, a wrong decision, because of the retroactivity, this affects the last 10 years or goes to back. So these are the effects our cost calculation, and these are affects our tariff. And we couldn't manage when we sold the policies and we designed a price, but we couldn't assume that these are these new costs or the new indemnity. So our price and claim balance is broken. So As you see, then bodily injured proportion increased very, very much, and it came to 50% of our total cost as a result of this. And in this, for example, I want to give information, give you an example. On the last 4 years, average bodily injury claims increased 300%, but our prices and premium increased 54%. And our premium became cheaper compared to this cost increase. Of course, there is a competition in the market, and therefore we couldn't increase the price, satisfying these increasing costs until 2015. And at the end of the 2015, price average came to $200. This is here we can say $90, and he came to $200. So almost triple or double about the price. And the market started, and the public opinion started to discuss why it's increased too much. It's too much. Actually, we have to admit that it's too much. Especially for the people who didn't get any involved, who did not involve any accident. We increase even these guys' MTPL policy price, but we didn't have another chance. And then we start to explain that our prices were cheaper than Europe. We are telling that to the public opinion, our prices were already cheap, because when we compare the European Union, when you see it's almost we are at the end of the table with these are belongs 2013. Our average price €100, and compared to the frequency of the MTPL, we are the maybe biggest or highest frequency compared to European Union. So we have our average frequency 90% of total of the market. Compared to EU, it's 6%, and we are the cheaper in the market compared to the European Union. So we said we couldn't sustainable with these figures, MTPL and our balance sheet soundness. So we had to do something, and then as a sector we increased the price. Because Turkey was amongst countries with the largest average MTPL and highest claim frequency. So, what is the solution? Maybe you'll discuss afternoon about profitability on the motor branch. I believe that in any country motor branches are not too much profitable, but I believe that claim ratio is not over 130 or 140%. It's maybe over 100 a little bit. 100% a little bit. So what's the solution? First of all, as a market we believe that we have to change this regulation about the highway traffic law. That's why we, as an association with the market, we focus on, in order to figure out this problem last 10 months. And I myself, for example, maybe sleep in Parliamentum 4 days in order to persuade our parliamenters. And finally, the good news is last week the regulation change realized and passed from the Parliamentum. So we are waiting the President confirmation. And after that, I believe that we will figure out all the problem based on the regulation. And these non-profitable non-life companies will start to have to gain money. This is my hope. Thank you so much for listening to me. This is my presentation about our market, a little bit, a small brief information.